Hi, folks. I'm Will Bridges from your team at 123 Trade. Welcome to this week's Forex News Market Forecast. We'll be talking about effects of, the macro effect on the stock market, on the Forex market, on a couple of different commodities. So we're going to kind of cover as much as we can in this short period of time. But I want to give you guys the raw, unadulterated facts about what's going on. And if you like this type of content, you like this type of market news, then by all means, press the thumbs up button and support us in the cheapest way possible. Absolutely free. Give us a little love. TLC. Subscribe, ring the bell. There's going to be lots of time-sensitive material that we're going to deliver for you here on this site, and the fastest way to get it is with the notifications from YouTube when we launch it. But let's go ahead and get the show started. This here is a risk disclaimer. Everything in this video will be for educational purpose only. No such thing as a guaranteed trade or a guaranteed investment. You do have to risk it to get the biscuit, folks. If you're looking for more education on trading, if you need a trading account, if you need help figuring out who to do that with, then send us a message. Visit our website. Our email address is right here below me. And you can also make a comment on this video. Whatever is the best way for you to communicate is the best way for us to communicate. But let's go ahead and get over to the actual news. And we've had a couple things happen already. We're at kind of the end of the government's workday here today. So this bank holiday in Japan, I can't imagine is going to be crazy important as far as the market goes. Stocks slip as gold slides. Oil takes a spill. Okay, that's the related story here. That's what happened on Monday. So really, it looks like people are maybe not traveling as much on their days off as you would want them to. It looks like my camera is actually a little bit further over than I need it to be. There we go. Got rid of that magic line. Dennis would have hated me if I let that go the whole time. But anyways, let's get to the actual information you need. The member Bostic speaks. So if you ever want to read any of these news articles that are here, you want to know what this is or who Bostic is, then you just click on this file button. Okay, and we can actually open up both of these articles, take a quick look at the tweets. Okay, this is the information put out by these people. Bostic, with reporters, would like to begin tapering as soon as the economy recovers. October range. So that's this year. Okay, so if they start tapering and slowing down bond purchasing, that might actually allow the dollar to fall a little bit, but that's kind of their signal that they may be raising rates soon. So this is actually fairly big news, relatively under the radar. Bostic says he expects interest rates could be lifted in late 2022. I don't need to go to Twitter to see this, but if the economy continues to improve, favor a balanced approach of tapering treasury purchases and mortgage-backed security purchases at the same rate. While they basically, they're allowing large corporations to buy up all the rental properties here in the United States right now. They're almost done with that job. But I prefer a shorter tapering period than prior rounds. Okay, that's whatever that means. We've basically never really tapered. I don't know that we're ever going to be able to do this. He's basically he's trying to show a little bit of strength here, is what it looks like. But he is in the 2022 camp, so they haven't changed that. They are talking about when they're going to taper. This is very much what we already knew they said that they were going to do, which doesn't mean they're actually going to do it. Member Barkin speaks. If we want to see what he said, we can come down here and we can click on these articles. And there'll be a couple little Twitter, feed stuff here. Inflation has reached 2% and it appears it might stay there. Wow. Very profound of you, Barkin. I mean, something tells me that we may be a lot higher than that. It has been all year. Bullish on the housing market, even if rates go back to normal. That's another flex. So he's talking about how they're going to raise rates at some point. They don't think it's going to be a big deal. They're trying to prepare the market for a rate hike, okay, which is going to be negative for the valuation of stocks. Rate hikes are going to make the housing market typically slow down a little bit because, it's harder to borrow. Interest rates will be higher. It's not as attractive to refinance or buy a new home. So all that stuff is very important. And if interest rates go up, likely to drive down things like gold and silver in the process because, now I can just hold on to money and get paid interest. Because currency itself will actually, be a little bit more profitable to have if it had a 4% interest rate attached to it or a 3% interest rate attached to it. But you get the point with that. This NAB business confidence. Okay, we haven't gotten a forecast for this number here yet, which is crazy because it comes out in about 4 hours from right now. And if we click this graph, it looks like it's been kind of coming back down, probably because they're locking the country down. If you're in Australia and you have any information you'd like to share about how things are going there, then by all means give us a comment, because really the news is kind of sketchy everywhere these days, and Sky News has been tougher to watch here lately also. But zoo economic sentiment in Europe here, okay, this is falling, okay, coming down from 61 down to 55. That probably has a lot to do with the fact that people are, marching, down the streets of France, screaming revolution, and also a lot of that seems to be happening in Germany as well, with the vaccine passports that are, kind of getting forced onto people right now. So the economy is going to take a little bit of a hit from that. These are still relatively strong numbers if we look at this graph compared to years in the past. So people are just very quickly losing the luster of 2021. People got real excited about this year. Everything's going to be different. And apparently it's not. We're still kind of looking at the same. The virus is back, cases are up, everybody needs to stay home, wear your mask, so nothing has really changed. But that being said, let's keep on moving here. Wednesday, we've got CPI numbers. They're looking for a decrease in inflation here, month over month, which basically means that we're still inflating, just not as fast as we were from an acceleration standpoint. That 0.5% is big, though, because this is compounding every single month that this happens. So this is not the yearly number of 2% that they were talking about from the Fed earlier today. This is the month-over-month number. Okay, so just to put this in perspective, if you did a 5% return in your trading account every month of the year, that's an 80% return for the year. So if you're talking about 0.5%, 0.9% every month, you're really multiplying by 1.05, 1.09, 1.08 every single month. So you're going to get a compounded rate that's more than likely going to be much higher than the 2% that they're talking about. At least that's the way that my math works. So core CPI, another similar number. They're expecting this to come down. If this does come out like they're talking about, like they're forecasting, then that would be, bearish for gold, silver. Might actually also be bearish for things like the Japanese yen, because if there's less panic in the world, then there's generally just not going to be a whole lot of desire to buy into things that people buy into when they panic, like the yen and the Swiss franc. If you want to see more about that, we actually talked about that in our Friday session last week, and we'll be doing it again this week with our Beat the Market Challenge. I'm going to show a lot of traders how to grow a $500 account, because I know a lot of people start small and they don't really know how much should I trade, like what's too much, and that's something I really just kind of like to show people rather than tell you what to do. But this bond auction number, okay, bond yields have been ugly for a long time. We could make an entire other video about bond auctions. Crude oil inventories, this number went up for the first time in a while. This past month, actually, I guess it's gone up two out of the last 3 months. Okay, so that basically means that supply is recovered, at least to whatever demand is. If we actually start hiring all these people for these open jobs, this record level of open jobs we have in the U.S., then that'll probably look pretty good. This inflation expectations quarter over quarter, 2.05% is extraordinarily healthy. New Zealand's such a good kid. They're like the smart kid in class, They've had this 2% inflation target for a long time, and they've raised rates, consistently over this 4-year period down here below. Could be that this inflationary number comes up higher, okay? It's really been trending that way, so it wouldn't be surprising to see this break out and us to see, 2.5 wouldn't be a crazy number for us to see. I would be very surprised if we're under 2 or anything less than this number we saw the last time around. But this GBP, preliminary GDP, quarter over quarter, 4.8% growth is huge. Huge. So I am bullish as a dog on the British pound. Same thing's going to go for the New Zealand dollar. I think both of those are really where I'm going to be the most bullish of anything on the earth. The U.S., really, it's hard to stay bullish for a very long time because as soon as you get excited about something, they decide to print another $1 trillion. At least it seems like so far for the last 18 months. But let's keep moving down here. That's why we're talking about all this inflation. That's what PPI is. Okay, that's why there's such a tight eyeball on inflation, because inflation is really only going to get curbed if they raise rates. And the scary part is they may not be able to actually raise the rates, Because if they do, there's no way that we can afford this other $5 trillion they want for this Green New Deal and the rest of this infrastructure bill, because we wouldn't be able to afford the interest payments. And at the pace we're at now, we're already on our way towards $49 trillion of government debt by 2025. Okay, we're at 29 trillion roughly right now. I'm talking about adding another 20 trillion in the next 3.5 years. Okay, so I'm not taking crazy pills. That's a lot of money to create via debt in a few years. You're talking about, a 60% overall. That would be a 60% move in prices, okay, over the period of that time. That's massive. I don't care what anybody says. Wage growth will not be as swift, and that's going to be a problem. So very concerning that the inflation is this high and they're not doing anything about it. And it's really because they can't. So if they hit this debt ceiling, or they don't raise the debt ceiling, whatever it is, we're really in an ugly spot. So I'm interested to see what they do to maybe try to lower the government debt. But it doesn't seem like that's on anybody's brain lately. So really what I'm expecting is continued bear activity on the dollar, even if we do see some improvement in some of our numbers here, mostly because inflation is basically showing the growth rate of the dollar going downward. It's the decay rate of the dollar is really what it is. So the dollar is going to fall until they decide that they want to jack up the interest rate and give it a little bit of support. So if they're not going to do that, then the dollar is likely to continue to fall. But unemployment claims, okay, this number has improved slightly, okay? It's crazy that it's improved by 10,000. We have 10 million jobs open. I wonder why. Most likely it's because they extended the eviction moratorium and you can continue to not pay rent and not get kicked out of your house. And it seems like a lot of people like that prospect, especially if they can collect unemployment checks at the same time and make $57,000 a year or whatever it is. I think it's $3,700 a month in cash, tax-free, just for being unemployed. So that's a recipe for us having a lot of open jobs and a lot of people claiming unemployment. I wonder if that's going to happen sooner, that they change that. Probably not. If anything, they'll try to extend it out further. So, like I said, still going to kind of maintain my bearish position on the U.S. Sentiment, consumer sentiment, they're talking about being roughly the same. Could be. Maybe, maybe not. Either way, I'm going to be kind of mixed bag on the U.S. dollar. For the foreseeable future, I'm going to be bullish on the British pound. I'm going to be bullish on the NZD. I'm going to be, somewhat bearish on the Aussie. So maybe the Aussie New Zealand might take a little bit of a bath for the next couple of days, weeks, months, whatever. Who knows? I'm going to be looking at a little bit of a slowdown in Europe. So Europe, Euro USD may go sideways, so probably not a super attractive thing to look at. I'd be more inclined to want to trade something like the pound Australian or the pound Canadian or the NZD CAD or the NZD, let's see, maybe the NZD JPY. By all means, if you have questions about this stuff, if you want more in-depth analysis, we do this stuff live. I'm going to come back on Friday with our students, our clients, and I'm going to show them more or less how all this stuff worked out. We're going to look for places to get in the market. There's a ton of opportunity. That's what inflation means. Okay, so if you're trading and you're like, oh my gosh, there's too much inflation, I don't know what to do. Now's the time. Because if you want to beat inflation, you've got to invest in something. You've got to bet on a horse somewhere. Otherwise, the money in your pocket's just going to burn a hole. And we're here to help you guys, try to make some money off of that sort of thing. But if you like this content, then press the thumbs up button. If you haven't done that yet, give us some love, subscribe, ring the bell. That is the fastest way to get notifications. We've got lots more information on our website. If you need help getting a trading account, if you want to trade some of this stuff with us, metals, indices, crypto, you name it, we do it all. Send us an email to brokers@123trade.com. Again, I'm Will Bridges from 123trade. Hope you enjoyed our Forex News update for this week. You have a wonderful rest of your day and happy trading. Take care, folks.